You won't have missed the fact that Christmas is just around the corner. And in the spirit of the season, I thought it would be quite good to come up with a few stocking fillers to give you something to consider and to think about over the festive season, and some ideas that you might like to implement in the new year. I have prepared a short list of tax planning ideas which, when implemented, could potentially save you several £1,000s. But please keep in mind that this is only an outline, and while some of the ideas are quite simple to implement, others will require further thought. So let's get started. Firstly, we have the dividend allowance. The dividend allowance means that the first £5,000 of dividends will be taxed at 0% from the 6th of April 2016. This means that you can pay dividends to each of your shareholders, whatever their marginal tax rate, and they will pay no tax on the first £5,000. The savings income allowance is similar, but here the first £1,000 of interest that you receive is exempt from tax, or £500 if you're a higher rate taxpayer. What this means is that if you have your own company and the company owes you money, you can charge interest and pay no tax on it. The employment allowance was introduced to help small businesses and to allay some of the costs relating to national insurance. At the present time, the deduction is £2,000, but this is going up to £3,000 from the 6th of April. However, it doesn't apply to companies where the director is the sole employee. But of course, the answer to this is to employ your spouse. And if you also want to make them a shareholder, then you can pay them £5,000 in dividends tax-free, whatever their current marginal rate of tax. And if you're interested in letting out rooms in your own home, then the rental room relief will enable you to earn income up to £7,500 tax-free. And this will also apply to small B&Bs and guest houses, where the owners live on the premises. Some of you will be able to remember when personal allowances were transferable in certain circumstances, and this has now returned with the married allowance. Up to 10% of unused personal allowances can be transferred between spouses, but does not apply where one of the spouses is a high rate taxpayer. Another simple but effective way of reducing tax is to think family. Look at what assets are held by each spouse and consider putting them in joint names or transferring interest-bearing assets to the spouse who either has spare allowances or is paying a lower rate of tax. Of course, this has the added bonus that it may be possible for each of the spouses to qualify for the £1,000 savings income allowance. The planned use of the annual exemption for capital gains tax can often be overlooked. The allowance is presently £11,100, and by putting assets in joint names, then on a subsequent disposal, you will get 2 annual exemptions, and this could be worth anything up to £3,108 if you're a higher rate taxpayer. And finally, let's come to a time-limited tax planning technique. You should review your income for the year to 5th of April 2016 with a view to maximising the dividends that you can pay to utilise your basic rate band, although some taxpayers will want to take their gross income up to £100,000. I hope that I've given you some useful tips and ideas on how you might be able to reduce your tax, at least by a little, over the coming months and years. But of course, if you want to discuss any of these in more detail, please do not hesitate to get in touch. My name is Alan Long from the Long Partnership, slaying your tax dragons and making life less taxing.